trying to stay active in the market today, so I've been looking for a trade that I could place an Iron Condor in. I have a number of calendars running and a number of Iron Condors. I try to have so many expire each cycle, and by each week rather, as opposed to cycle. I try to have so many expire each week. I've got need to add one or two more for the 11/29 expiration. So I started looking through some stocks, trying to find one that I thought would be a good one to place an Iron Condor on. And I've been looking at Children's Place. This is a stock that I trade fairly often. I haven't really traded it since this 9/16 pullback. I've been waiting to see what it was going to do. It looks like right now, if you look at it, that it's building a base and maybe starting to try to move back up. It's going to have to show me a little bit more before I'll buy into that. But it does show that look like it is trying to move up some. Just be careful because you can get this drop off really fast in this stock. So you have to be careful with it. Also looking at the candles, there's a lot of buying upside here going on. It looks like as you get these long wicks to the bottom. This chart is my 21 EMA wave with a Keltner, 2 deviation Keltner channel and RSI. I have a video on how to do this and how to set this up. If you're interested, you can look at it on my in my YouTube channel. But what I'm seeing is, number one, the Keltner channels are starting to open up just a little. They're also starting to turn up. I've already checked the IV on Children's Place on another platform, and it's running about 46 right now, which is a pretty good area to sell an Iron Condor in for this particular security. Ideally, if you're selling an Iron Condor, you want the IV to go down over the course of while your trade is open. And I typically sell Iron Condors 28 to 45 days out. This one, if I sold this one today on my real account, this is the TD Ameritrade simulated account here, but I actually did place this trade already on my real account, and I've already in this trade. But hopefully what I want to do is it to stay range bound, and I want the IV to drop, the implied volatility to drop. I like the way it looks right here. It's trading at that 21 EMA right there. It came off that 2 standard deviation, so I'm hoping it's going to consolidate. I want to take a look at another indicator I use. These are my Bollinger Bands. Show you how to set these up in a video on my YouTube channel also if you don't know how. And you can see it jumped up to the 3rd deviation here, and now it's pulled back to a 1 deviation. So I think it's right in the center of where it's going to stay. It does appear to be slightly in an uptrend, but you know, the way the market is today, and the fact that we've got a downtrend coming from back here, showing all the way down, I am concerned that it's going to maintain the uptrend. If I thought it would, I could just you know, buy a call here, or a debit spread or something like that, or even a a calendar up in this area. I could do that, but my gut feeling is, yes, it's in an uptrend. Yes, the market's pulling up. Yes, you're seeing some buying here, but I just really feel that there's a potential that this could drop because of this overall trend going back. So I think an Iron Condor would be the best trade to place in this particular security. As I said, I've already checked that the IV. I actually checked it in the Tasty Trade for this particular one on my Tasty Trade account, and had a 46 implied volatility. So I like that. You can tell that, again, you can look at your Bollinger Bands and kind of get an idea of what implied volatility is doing also, where you can see where it's expanding here. That usually your implied volatility is going to be going up while this expansion is going on, and then when it contracts, implied volatility is going to go down. So we are getting a little bit of a move up here, which would tell me, if I didn't have any other way check implied volatility, you could use your Bollinger Bands to kind of identify that. I also know that earnings are on 12/5, so I want to be out of this by 12/5 if at all possible. So that's another thing that I'm aware of. So now let's try to set up the Iron Condor. And again, I'm using TD Ameritrade. And I want to go 28 to 45 days out. I'm looking for the 1129 cycle on purpose. That's where I'm trying to fill some. I'm going to scroll down and try to find a decent amount of profit here and keep my high probability of success as well. So I'm going to go down to the 75. I'm going to right click, I'm going to sell an Iron Condor. It populates it for me here. I'm going to do the 75, I'm going to short the 75 put, and I'm going to buy the 70 put to cover it. And that would be my short side. On the long side, I'm going to look probably into the 90 range. So that would give me, I'm going to short the 90 call, and I'm going to buy the 95 call to complete my Iron Condor on this trade. Now it's showing a $1.97 credit. With the bid-ask spread, you're not going to get that. I'm actually going to put in what I got filled for today, which was $1.34. That is what I got filled for on this particular trade. Now, one thing I like about TD Ameritrade is it does show probability of this trade finishing within that range. You can kind of get an idea by looking at your deltas. You know, right here, you got a delta 23, which is about a 20% chance of finishing out of the money, or finishing in the money rather. And then if you're going up to your 75, you got about a 34% chance. So if you added those together, you're going to know you got about a 62% chance of it not being in the money. But if you've got TD Ameritrade, you can click on Risk Profile, and it will bring up this nice little Iron Condor for you, showing you how you make money, where you lose money. You're going to change the date here to the expiration date of this position, which will be 11/29. And then what I want to do is go back and move it to break even. So, you know, what it's telling me is that, actually I've got this set up wrong. There should be a 70 and a 65. That's why it was showing $1.97. I knew that didn't look right. I knew that probability was way too low. So this is the one I placed today. I sold the 90 call and the 70 put, and then I bought the 95 call and the 65 put to cover for $1.34. So now let's go and set slices to break even again. Much better. I've got a 65.4% chance if I hold this to expiration, based on volatility and where my strikes are out of the money, that I'm going to get to keep some sort of credit on this trade. You know, if you look, you know, in this area, you can see that my max profit here is my credit, which is $1.34 on one contract. My max risk is the difference between my short position and my long covering position, which is 5. On an option, you know, it's 5 times 100 shares, so that's $500. So you would take the $500 and subtract the $134, and that would give you your max risk on this trade. So a max risk is going to be about $366. That's the most I could possibly lose on this trade, and I'm against $134 profit. So if I get to keep the whole $134 profit with a $366 risk, that's about a 36% return. You know, that's pretty good with a 65% chance of being successful. Now, in case you don't know how Iron Condors are done, if you go to my website, tradeforprofits.com, I give you a lot more information on how to set up Iron Condors and how they work. I've got a video also on YouTube about them. I'll probably do some more in the future because I'm going to show a lot of the actual trades that I place, so you get an idea of how I actually trade them. So I've got a $1.34 credit on this. If I keep it until expiration, I've got a 65% chance of it finishing with me getting something in the money. But that's not what I'm going to do. I'm going to set a closing order on this particular trade for about 50% of that $1.34. So that means that I will actually get to keep about $67 on a $366 risk, which is about an 18% return. But because I'm trying to get out of it early, I probably will not be in it the entire 29 days. So the length of time I'm in this trade is probably going to be a minimum of 14 days to a max of, 26, possibly 28 if I don't have to roll it. But because I'm going to take the lower credit by trying to close this at 50% of what I paid, it really makes my chance of being profitable a lot higher. Probably in the 80 to 90% range of being profitable, and I base that based on how many of these trades I place and how successful I am in closing them, making profit on them. So, if you want to place, a high probability trade, these are great trades to place. I'm seeing about a 90% success rate on these trades. The biggest negative to them is the P&L, because typically if they do go bad, where if everything goes right on this trade, I'm going to make $67. If it goes really bad, I could lose $366. So what you end up with on these types of trades is a P&L that's kind of skewed, because when you lose, you're going to lose a lot more than you get when you win on these. But with a 80 to 90% success rate, you can do that. Short of a big market move down or a huge shoot up sometimes, typically these trades are pretty consistent. I also only enter a couple a week at most, and I try to break my my closing to out. So like I'm doing 11.29s right now. Next week I'll be doing, I think, 12.5s. So I try to only enter one to three trades a week using this strategy, and I try to spread out my strike expirations so that I'm not heavily piled in to, say, a 12/20 expiration, which is the December monthly. If I were to enter 10 trades today with the current market conditions, all expiring on 10/20, then I'm really tied to whatever the market does from today forward, as opposed to the way that I enter them, which is a couple a week, using the weekly expirations, so that one major market move won't necessarily cause huge losses for me. I know there are a lot of people that trade these, and they may enter 10 in a week that all expire using monthly expiration, and that's fine unless something goes wrong right before that monthly expiration, or something goes wrong during the week you're entering all of them. So I like to spread it out. My strategy is a little different because I like to spread that out. But I just want to keep letting you see these types of trades that we're placing and give you an idea. Although this is a simulated account I'm showing you here, I actually did place this trade about an hour ago, and it did fill, so I am in this trade. And I'll try to always let you know when I'm actually in a trade and when I'm just showing you potential trades, just so you know what I'm really trading. But I am in this trade on my real account. I'm going to try to close at about 50% of the gain. This is the way these trades work. Typically, I find them by first going through a list of stocks that I trade often, and both stocks and ETFs. I prefer ETFs, but right now the volatility is really low in a lot of them, so it's difficult to get enough money to make it worth it. Because the last thing you want is for volatility to go up after you enter an iron condor, after you sell an iron condor. If you have any questions, let me know. Please like and subscribe to my channel, and like this video. Put comments below, and that way I know what kind of trades you'd like to see more of. I do a lot of iron condors, so you'll see those quite a bit. Do quite a few strangles. I do quite a few diagonals, a few covered calls. I do some actual swing trading with stocks, especially now that most of your financial institutions are giving you zero commissions. And I also like that on my diagonals, because even if I get assigned, it really doesn't cost me that much. So the 0% commissions are going to make me a lot more profitable going forward, and it should make you a lot more profitable also. If you have any questions, let me know. Thank you for tuning in.